Is the government about to send us more money? President Trump has recently proposed the idea of a tariff dividend, a $2,000 check for most Americans, kind of similar to what we saw back in 2020 when we got those COVID stimulus checks. I know you remember them. We got them and we put them into the markets, and the markets ripped. In this video, we're going to talk about why Trump is looking to issue a tariff dividend. We're going to talk about the economic impact and how assets are going to be impacted, assets like Bitcoin and stocks. And we're also going to get into the likelihood of this happening. Before we get started, please make sure to like the video and subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code down below for a Bitcoin tip. So if you want to support the channel, feel free to leave me a little tip. Now let's get into it. Trump proposed this tariff dividend idea a couple of days ago in a Truth Social post. I'm not going to read the whole thing, but to sum it up, he basically said that people who are against tariffs are fools. Everything's going great. We're going to use this tariff revenue to pay down our national debt. And now Americans are going to get these tariff dividend checks. So he's basically trying to gain support for these tariffs and for himself, right? These tariffs have been very controversial, and he thinks that if he gives everyone money, he is going to get more support. People may be more on board with these tariffs. Now, everything that he said in this post, I don't think is necessarily true. I don't know how well these tariffs have really worked, and I don't think they're really going to be able to help us pay down our national debt. I think that's going to keep growing, but I think that that's the main idea behind this tariff dividend strategy, is to gain support. Now, another reason why he may be looking to issue this tariff dividend is to support financial markets. We all remember what happened back in 2020 when we got those COVID stimulus checks. What happened? At first, the markets were crashing from COVID, but once we got this money and everybody put the money into the markets ripped higher. We saw Bitcoin head higher. We saw the rest of these cryptocurrencies rip higher. We saw the stock market going up. So the financial markets have been looking a little bit shaky recently. Bitcoin just broke below 100K. We could actually take a look at a little chart of the Bitcoin price over the past month, down around 95K right now. And also the stock market has been looking a little shaky. It's not really down over the past month, but it's been pretty flat, and some stocks have recently shown big weakness. We can look at a company like Disney, who recently had earnings, and we saw their stock tank. So part of the strategy here is to support the markets, and the main reason that the markets have been showing weakness is because liquidity is getting very tight in the financial system. This is something that I've been talking about a lot recently in my videos, so you should check out my recent videos if you haven't already. But we've seen that the Fed isn't really helping. The Fed has been cutting rates slightly, but at the last Fed meeting, they basically insinuated that they might not cut at their December Fed meeting. A December rate cut was priced into the markets, and now we're seeing this rate cut kind of being priced out. So I checked on Polymarket, and it's looking like there's a 51% probability that we don't see a cut in December. So it's still a bit of a toss-up, but a couple of weeks ago, the probability was much higher for a rate cut. So who knows what's going to happen. We've also seen that the Fed has not done QE yet. They have not started printing money. They have announced that they are going to be ending QT in December, which is great, but they haven't switched to QE. And typically when we see the Fed switch to QE, that's when we see financial markets get a little bit more life, right? The markets love liquidity. Bitcoin loves it. Stocks love it. But we really haven't seen the Fed turn on the money printer. And there's also other factors impacting liquidity, like these tariffs, for example, which are liquidity negative. And as we see liquidity get tighter, this is reflected in asset prices. We see asset prices coming down like Bitcoin. So I think Trump thinks that if he sends out these checks to people, they'll take that money and they'll stick them back into assets, and that'll push prices back up. Now the question is, are these tariff dividend checks actually going to happen, or is this just another Trump bluff? And to be honest with you, I think it's another bluff. We know that Trump loves to make these announcements to mess with the financial markets. We remember back in October when he made that tariff threat on China, and we saw the markets tank. Now that the markets are looking a little bit weaker, I think that maybe he made this announcement to provide some positive sentiment. And when he made this announcement about the tariff dividend, we saw Bitcoin spike up a couple $1,000s. So I think that Trump really just likes to mess with the market saying one thing, but he rarely ever comes through on what he says. And I really don't think that the US can afford this tariff dividend. If we look at the math, it doesn't add up. Looking at the tariff revenue that we saw for the 2025 fiscal year, which ended in September, this was $195 billion. And then if we look at the estimated annual revenue that we'll see from these tariffs, it's between $200 and $300 billion. But let's look at the expense for this tariff dividend. If we look at all the eligible recipients, so adults who make under $100,000 per year, Trump said that people who have high income aren't going to get this dividend. So let's take that 150 million adult number and multiply it by 2,000 for those $2,000 tariff dividend checks. That would bring it to a total expense of $300 billion. So it looks like the total expense of the dividend wouldn't even be covered by the tariff revenue that we've seen. So I don't know how else they're going to fund this, but to me, this doesn't really make sense, right? How are you going to give out $300 billion to Americans and maybe even more if more people are included in this dividend if you haven't even made that much from tariffs? So Trump always talks about how these tariffs are going to help us get out of our national debt and, they're going to bring in trillions of dollars worth of revenue, but I don't really see it happening, right? For the 2025 fiscal year, we saw $195 billion, and who knows, maybe it will rise a little bit in the years to come, but this definitely isn't going to allow us to get out of our national debt situation, and I don't think that sending this tariff revenue to Americans is the best use of the revenue. Looking at the economic impact of this tariff dividend idea is funny because basically what the US government would be doing is they'd be taxing these producers for importing through these tariffs and then taking that tax money and giving it to consumers, giving it to adults who are making under $100,000 per year. And then those consumers are taking that money and spending it, giving it back to the producers. So it's kind of like this weird cycle idea. And I guess some of the thinking here is if you give that money to these consumers, they may put more of that money into the financial markets than producers would. But really, it's not having much of an impact on the economy because you're taking the money away from the producers and giving it to the consumers who are then just going to give it back to the producers. So it's kind of a weird concept, and I think this is one of the main reasons why this is just kind of like a ploy for Trump to earn support and to gain more voters. Now, one last thing I want to answer is, would this tariff dividend be inflationary? And I would say directly it would not, because if you are paying for this tariff dividend, this expense with your tariff revenue, that is not going to lead to an increase in the money supply directly, right? You're using your tax dollars to pay for an expense, which is technically what the government should do. It's when the government takes out debt to pay for expenses that we really get inflation, because that leads to wider deficits, and then the government eventually has to come in and print money. But indirectly, I would say this will be inflationary, because if the government takes all of this tariff revenue and pays for this tariff dividend, rather than paying for all the expenses that they already have, this is going to lead to wider deficits, which is going to lead to more debt. As the debt grows, less and less people are going to want it. And then the Federal Reserve is going to have to come in and buy the debt that nobody wants. That's what we call QE, aka money printing. And that is how the money supply grows. So I think that the US government should probably take this tariff revenue and use it to pay for some of the expenses that they already have, rather than creating a new expense, a $300 billion expense through this tariff dividend. That's going to wrap it up for this one. I don't really think we're going to see this tariff dividend. I think Trump is bluffing on this, and he was just looking to manipulate the markets a little bit, like he does, looking to provide some positive sentiment as asset prices were coming down. If we do get this tariff dividend, I do think that it would be different from that COVID stimulus that we saw in 2020, because that stimulus was funded by debt and this dividend would be funded by tax dollars. So it is a big difference, but we will see if it happens. If you didn't like and subscribe, please make sure to do that now. Thanks for watching. I'll be back soon.